Hey everyone, it's Tom Thornton with Hedge Fund Telemetry, and I wanted to do a quick video market ahead of the Fed today. I have a lunch with about 10 fund managers. It's a Christmas lunch that I do every year, and with the market the way it's acting, they're probably going to make me pay. But I just wanted to go through a couple things, and I will be back later. Hopefully the wine will be at a minimal consumption for me today. But after the Fed, we'll know a little bit more of what's going to happen for the next 2 weeks going into the end of the year. But I did want to show a few things today on the momentum retirement monitor that we have on the site. And I'm just going to go through a few highlights and a little how to use this monitor. And I really like it a lot because it shows a short-term through an intermediate term time frame. And I really feel like everybody can use it. I update it once or twice a day, depending on how the market conditions are. And currently right now, if you can see my screen here, this is the NASDAQ QQQ and the S&P right here. And we're in sort of a holding pattern right now. The S&P 500 is down 21 bips and the NASDAQ 100 down 38 bips. Right here on my screen, I know it's just a mess, but Apple and Microsoft, they are both positive on their custom index, while the FANGs are down over 1%. The top three NDX names are down 1.5%. So it's a heavy day. Breadth over here, NYSE is down almost 1,300 issues, and the NASDAQ down 1,800. So it's a tough day right now. I don't know which way the Fed's going to go. I think that Fed Chairman Powell better be on the neutral side of hawkish, unless because this market could just slip right through the support levels that we have right now. And considering the internal damage with all the breadth divergences of percentage of stocks above the 20, 50, and 200-day moving averages, well below where the S&P and NASDAQ are, is related to where they are versus their, let's say, 50-day moving average. They're still above the 50-day moving average right now. So let's take a quick look. I am going to pop this here. And so let's just go, let's start here at SPY. So this is, I run this off of Excel sheets, which work pretty well. And what I like about it is it gives a ranking, and the green is 1, that's a buy. 2 is amber, it's a neutral caution. It's getting towards the middle point, and I'll put a 2 on there if we start to see momentum move on something closer to a buy or closer to a sell. And then the 3 is a red, that's a sell. That's pretty easy to explain. Oh, great, my there we go. Let's start here with the Qs. So basically, the monitor looks at short-term through more intermediate term timeframes. And this is really pretty good for people that are managing retirement accounts. And I had a lot of people that asked, hey, can you do something that has a forced process of finding something that I can be long, short-term, long-term, and have something that I can see. So one thing that I will show you here, and this is on the site, it looks exactly the same. Let's say right here, oops, here we go. Here's the Qs, and you can click on the hyperlink and it will give you the stockcharts.com chart. So I'm happy to share, and you can look at it. Stockcharts.com is a very good, accessible, easy to use, and really has a lot of technical power that I like to show. So the first input is the 9-day RSI, and you can see when it gets really overbought here, but the main thing is when it breaks below the 50% level, and that's what I watch for either a buy, neutral, or sell. And currently right now it is in the under 50%. It is a 3. The second is a MACD, which I use a single line MACD, and it's basically a 5, 10, 1 that is a 5-day versus 10-day. And then the Kappa curve right here is a smoother, more trending indicator that I like a lot. And then I use a 1334 MACD and a 20-50-day MACD here, and it's a single line. So basically you can see the short term here are, these three are turning to sells. This one is moving towards a 2, and the longer term still is a confirmed buy here. And as you see here, it's a 333. Well, we're going to be 2 probably, but still 1, 1. And as you see, I updated on today, 12/15, and the current ranking is a 2.2. Now up here is the score of all the different ETFs that I have here, and I'm going to expand them because I only have one Asian market. Emerging markets, I use the EEM, and also in Europe, I use just FEZ, the Euro Stoxx 50. But as you see, the US indices are a firm 3 on the short term, 2.6 on the second, 2.4 on the third. So that's showing some weakness here. And let me just go through here a couple more. So the SPYs, for some apparent reason, I lost the 50% level here, my lines. That happens every once in a while. But you can see here that we're starting to break below it on the 9-day RSI. The 510 is starting to break below it, and it should today. The Kappa curve is actually improving, but still below 0. And then the longer term are still firmly buys here. So as you see here, that's a 3, 2, 2, 1, 1, and it's a 180. So the SPY is doing a little better than others. The diamonds is still okay. OEF, which is the S&P 100, is still okay, but starting to weaken a bit as well. Now, on the other hand, I've talked about the IWM grossly underperforming. I'd made a lower high bounce here, and now we're starting to break below, and you can see the spikes lower that did not hold. However, I think we have on the IWM with the DeMark indicators, I think we're on day 7 of 13 on the downside. So I do see this moving lower before higher. And as you see on here, we're all below here, and these are all 3s. It's been a sell for a while. I have the last update I did was on 12/9. Here's XLY, consumer discretionary, and of course you have a lot of Tesla, you have a lot of Amazon in there, but it's breaking down here, and all of them, or actually all 3 of the shorter term, are now firmly in 3s, sells, and you now have the longer term are moving towards that as well. And you know, one thing, a lot of people have told me that they like this a lot because you can, if you're a shorter term trader or you're more intermediate term, you can kind of pick one of these that you can follow each day. So this is showing some weakness. As you see, we're breaking below the 50-day moving average here, and it just, honestly, it has very, very little support. It's just an air pocket back down to the October lows. So keep an eye on that. And as you see here, XLY is a 3, 3, 2, 1. So we're moving towards this. This will probably move to a 3 real soon. Communications has been really, really weak, and you had a major peak here. Oops. Hi, DeMark. Oops, wrong button. I'm good. I got this. It's my DeMark chat. And you had a major peak here with the 9-day RSI, and it's been sort of languishing, giving some false buy signals. And the second one as well has been also under some pressure, but it's been weak for a while. It caught these down moves. And as you see, if you're a longer term investor, you would have been out around here and not suffered some of the drawdown. And here's tech, XLK. Now this one, as we know, with Apple, Microsoft, and NVIDIA really doing the major work here, It's starting to show some momentum weakness here. And as you see, the 9-day RSI is starting to show some weakness here. The 510 is moving back towards a 2, it's at a 2, and it could fade here. But we really didn't get, you see a big divergence here, made a new high, but the momentum did not. And that, I think, is something to watch. Longer term, these still have a lot of time before they turn to sell. So these are still firmly in uptrends, and until that changes, the longer term remains a buy. Semiconductors, the SMH, very similar. However, we did get this big cluster up here, and the NVIDIA, which we were short and took profits yesterday, and AMD, it's trying to hold this level here at the 290 level where we were just a couple weeks ago. But the momentum on the short term is starting to weaken, and even on the longer term stuff, it's starting to turn down just a little bit, but still firmly in an uptrend. It's tough to short, but on a tactical basis, you can. KBE, which is the S&P Bank Index, I like this one a lot. I use this ETF more than the XLF because XLF has Berkshire Hathaway, a railroad company, and Candy Factory among the conglomerate. So it's not a pure play financial. But as you see, it's holding this support level right here. It's a little precarious, and you're looking at a 200-day moving average. And that's been a decent place to buy, and we'll see if it works. But currently right now, they are all in threes, and even the longer term is turning to 3. Transports are also looking a little bit questionable here. They made a lower high. This did break below the 200-day and bounced, so we'll see. It did it here as well. We'll see if that happens again, but it definitely looks a little weaker. FedEx is down a little today. It's actually unchanged. We sold our long yesterday, made 4%. It was a pair with DoorDash, worked out well, but they report on Thursday, and I just don't really feel like the need to be there because it's going to move either 6% up or down, and it's really hard to tell, especially after the retail sales numbers came in just a little light of expectations. So as you see here, short term, we're starting to see some weakness. It's already been weak here, and the longer term, it's starting to show a little bit more weakness. So I'm cautious on this. On the other hand, XLV has been really strong. That's healthcare, and that actually turned back to a positive, almost got to a sell in the longer term, but it's all ones across the board buys, and it continues to trade well, but you still have this, real tough breakout in a tough market. So I'm a little bit cautious short term, but this might be a place to find some ideas. Energy, as you know, I've been a little bit more cautious on energy. Up here, it doesn't show it on this chart, but we did have exhaustion, DeMark 13, sell countdowns, and we're starting to make a new, trying to probe the recent low here, but we are firmly in 3, and these two longer term are moving towards threes as well. So I think that it'd be great to be able to get XLE back to the 50-day moving average. It worked well here, and possibly we'll get some DeMark buy signals as well. I really like energy into around the middle of January. Seasonality from mid-January through May, it's a knockout great trade. So we'll see what happens here. Throw in COVID, and anything's real possible, and you can really, maybe throw out all the seasonality, but it's something I'm watching. OIH, similar story with the oil drillers. It tried to get back positive here. It did get oversold here, but again, it's really starting to show some weakness here, and I do believe there is a DeMark countdown on the downside here in play. Biotech versus XLV has been really bad for a while, and when this broke down here, all the longer term momentum measures got you out, and you avoided some of the drawdown here. One thing about momentum is it's not, it doesn't pinpoint the exact highs and lows to sell and buy. but it does get you out of some problems here, and it gives you some confirmation when the trend starts to move in the proper direction. So I think it's worked out well. And now FEZ, let me get my thing here. That, well, this is another one that's been sort of like the IWM. It's been through June in a range, made a little bit of a new high here, just like the IWM, but it's starting to probe a little towards the low end of the support levels here, 44, 44 three times. And as you see, we have the two short-term indicators back into threes, sells, and the longer term have been in sells for a few weeks now after this drop. So I think right now, I want to leave it there. You can go through this and see which ones have been on sells. Gold has been firmly in a sell. The GDX has been in a sell. Silver firmly in a sell for a while. You also have the utilities, all in ones. Those are acting well. Real estate still is acting okay, all in ones. And what else? XLV, as we talked about, and the staples. I didn't put staples up here, but I think I want to. It's been really, really strong. And they're the 50% levels. But you can see here, all in buys here. It may be extended. Coca-Cola, by the way, which has been ripping, did get a DeMark 13 the other day. And if you want to just take a quick look at, here is the DeMark screens for the S&P today. Stop blinking. Okay, so you can see here that it's kind of nice because we're starting to see some buy indications here. Discovery, you have some longer term weeklies here. Pepsi, staples there with a weekly 13. The combo 13s, HPQ, still there. LUV on the sequential weekly and the combo weekly. You have a 13 here and a 12 here. So that might be an idea to start looking at for 2022 as a long-term idea. And then you have the on deck 12s here, Anthem, J&J, Masco, which I think might be under pressure today because of lows guiding down. Coke here on a combo 13, so you can keep an eye on that. One thing to watch also is the price flips. When you see the red here, that means it's making a 4-day low and not actually closing lower than 4 days previous. And this one is a buy PKG. It's making a 4-day closing high. So that's it. I will be back later today after my lunch with all these crazy money managers. And I just wanted to put that out and hope everyone is having a great December. And I'll be doing more videos, but and happy holidays to everyone. So that's it.